Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about TIMKEN CO quarterly report. The Timken Company offers a diverse range of businesses and services across two main segments, engineered bearings and industrial motion. Engineered bearings segment, bearing products, plus tapered spherical and cylindrical roller bearings, plus plain bearings, metal polymer bearings, and rod end bearings, plus radial, angular, and precision ball bearings, plus thrust and specialty ball bearings, plus journal bearings, plus housed or mounted bearings, industrial motion segment. Engineered products, plus industrial drives, plus automatic lubrication systems, plus linear motion products and systems, plus chains, belts, couplings, plus filtration systems, plus seals, plus industrial clutches and brake services, plus industrial drivetrain and bearing repairing services. The decline of the Timken Company's TKR stock price by approximately 7.48% from October 31, 2024 to October 31, 2025 can be attributed to several factors. Despite reporting a 2.7% increase in third-quarter sales, the company's net income decreased, and its full-year 2025 outlook was revised downward. The strategic shift towards a more diversified industrial business may have also contributed to investor uncertainty. The stock responded positively to some news items, such as the strong second-quarter earnings report, which showed free cash flow growth and an increase in quarterly dividend. However, the overall decline in stock price suggests that investors were more concerned with the company's financial performance and strategic developments than its short-term gains. A key factor in Timken's stock price stability is the company's exposure to automotive original equipment manufacturers, OEMs, which accounted for a significant portion of revenue in 2024. The shift towards a more diversified industrial business may have led to investor uncertainty, contributing to the decline in stock price. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by the engineered bearings segment, which saw net sales increase due to higher pricing and renewable energy demand. Additionally, favorable foreign currency exchange rate changes and acquisitions had a positive impact on total revenue. Market expansion and targeting attractive market sectors also contributed to revenue growth. On the other hand, revenue decline was mainly attributed to the industrial motion segment, where lower end market demand and volume led to decreased sales. Unfavorable foreign currency exchange rate changes and lower organic revenue also negatively impacted total revenue. Furthermore, a shift in distribution channels from 45% to 40% direct to end users had a neutral impact on overall revenue. Net income and profit margins decline. A summary: the company's financial performance has taken a hit in recent periods. Net income decreased by $13.3 million in Q3 2025 compared to the same period last year, and by $48.8 million YTD 2025. This decline is also reflected in the net income margin, which dropped from 8% in 2024 to 6.5% for the 9 months ended September 30, 2025. Profit margins have also suffered, with operating income margin decreasing by 1% in Q3 2025 and 1.8% YTD 2025 compared to last year. The adjusted EBITDA margin has also declined from 19% in 2024 to 17.8% for the same period. The reasons behind this decline are multifaceted, including impairment charges, gain on sale of assets, and changes in operating assets and liabilities. These factors have cumulatively contributed to a decrease in profit margins, impacting the company's overall financial performance. The company's financial performance indicates a steady generation of positive operating cash flow. The net cash provided by operating activities has consistently increased over the past 2 years, reaching $371 million in 2025 compared to $297.1 million in 2024. This trend suggests that the company is effectively managing its operations and generating sufficient cash to support its growth. The company's financial performance reveals a strong showing from its engineered bearings segment. This segment demonstrated growth in both net sales and adjusted earnings before interest, taxes, depreciation, and amortization (EBITDA) during the third quarter. Net sales increased by 3.4%, while adjusted EBITDA rose by 4.2%. These results indicate a successful performance from this key business area. Management is optimistic about the company's future prospects, citing plans to expand into attractive market sectors outside the U.S. To support this growth, significant investments will be made in facilities, equipment, and potential new acquisitions. These investments will be funded through a combination of cash reserves and unused lines of credit, with a focus on leveraging local resources where feasible. Acquisitions and divestitures overview. The company has made strategic moves through acquisitions and divestitures to shape its business landscape. Notably, it acquired Lovejoy, page 15, expanding its capabilities and presence. On the other hand, the company has also engaged in divestitures, with a notable instance being the gain on sale of real estate, amounting to $13.8 million in 2024, page 1. This move suggests a strategic decision to optimize resources and focus on core operations. The company's financial summary reveals that they have engaged in both dividend payments and share buybacks. Specifically, the company has a history of paying dividends to its shareholders, as mentioned on pages 3 and 30 of their financial documents. Additionally, they have also utilized share buyback programs, further demonstrating their commitment to returning value to investors. Concerns about inventory buildup and supply chain disruption. The company's financial summary highlights potential issues with inventory buildup and supply chain disruption. Key indicators of these concerns include a significant increase in inventory levels for raw materials, work in process, and finished products, 6.5–13.4%, incremental tariff costs, higher manufacturing costs, and lower production volume, which may indicate supply chain or inventory management issues. Higher material and logistics costs, unfavorable foreign currency exchange rate changes, and lower production volume. These concerns are scattered throughout the financial summary, but they collectively suggest that the company is facing challenges in managing its inventory and supply chain. That concludes the financial summary for TIMKEN Co. Feel free to comment below, and I will be happy to answer them when possible.